Welcome back to another episode. First, I just want to say, hope everybody had a great weekend with the family, with friends, with spouse, with whoever. But today, now we're getting back into the market. We're going to take a quick look at Unity Software. This is one of my favorite companies, a tier 1 player in my portfolio, and right now is up about 1.2% for the day. This company did report earnings late last week on Thursday, and stock price has done pretty well. So in today's episode, I want to take a quick look at what happened during their earnings. We're going to take a quick look at my overall thoughts and some of the growth potentials for Unity. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's start off with earnings recap. Fourth quarter for 2021 was revenue of $315.9 million, which was up 43% year over year. This company did make an acquisition of Weta, which finished off in the fourth quarter, so it kind of helped out of revenue with it. If you exclude that acquisition, revenue actually grew 41% year over year, opposed to that 43%. I think that's still really strong growth for this company. This company is mainly known for two main segments: create solutions. This is where if you're a developer, you're making the game, you're paying Unity to make the game. That's about $100 million, so a little bit less than 33%, a little bit less than a third of total revenue, but that increased 49%. The second segment is probably my favorite segment, and this is the operate solutions. This is what happens after the game is being created, or after your content is created. If you need someone to manage the cloud, if you need multiplayer, if you need ranking, if you need advertisement, that goes in the operate solutions, and that revenue was $194.6 million. That's roughly 66% of total revenue comes from that segment, and that alone increased 45%. Unfortunately, the company is not profitable. Non-GAAP loss from operations was $12 million, or 4% of total revenue. I don't think that's horrible. Maybe some people might, but something I wanted to keep out there. The company is also increasing the amount of customers it has that provide more than $100,000 in trailing 12 months revenue. Right now, it has about 1,052 customers compared to the same time last year of 793. One of the most impressive metrics for Unity is their net expansion rate is 140%. Free cash flow in the fourth quarter was also burning. So this is a company that burns cash. This quarter alone, they burned about $53 million. But I don't want to say it's the worst thing, because this company does have about $1.1 billion in cash equivalents, and restricted cash. So roughly, let's say $200 million a year. This company has enough cash to be able to continue that burn rate for at least 5 years and still be in business. I don't think that's going to be the case, but in theory, this is still a company that is fundamentally stable for at least the next 5 years. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. They also had full-year revenue of 2021 to be $1.1 billion, and that was up 44% compared to 2020. So this is a high growth machine. The company did give guidance for the upcoming year. They expect 34 to 36% revenue growth, pretty impressive growth machines. Weta FX, which is a recent acquisition, is expected to give a nice percentage of that revenue, roughly 70 million. So without the acquisition, this company would grow in the low 30s. Not horrible, but again, I know some investors might be like, hey, this is a company that's only growing because of acquisitions. To each their own. This company is expected to be free cash flow positive this year, because Weta FX, the acquisition they just got, is expected to receive some payments of 4 years of licensing fees. I don't believe this cash-free positive is going to maintain in the following year, but it is going to be some great news. I think investors might get a little bit too excited to see that. At the end of the day, though, the management does believe that revenue can grow above or at 30% over the long term. So this is a huge growth machine, and they expect to break even on a non-GAAP basis within 2023. So not this year, but next year. Again, Unity software is fundamentally stable and they are improving their margins as they progress, which is great news. Some of the top highlights. This was a strong non-gaming quarter, and this is what you want to see, right? Many people believe that quarters were just okay. I think it was just okay in the gaming side, but it was very, very strong in the non-gaming side. They got partnered up with numerous players that we're going to see in a bit. Another thing, when this company IPO'd a year and a half ago, I believe, IPO total addressable market was expected to be somewhere around $29 billion for their create and operate solutions, which is probably 90% of total revenue. Current estimates for this total addressable market is now $45 billion. With this company just crossing $1.1 billion in total annual revenue, that only represents 2% of the total market. So Unity Software and Management is saying that, hey, right now we're growing at crazy levels, but even at these crazy levels, we are barely scratching the surface in this market. They did mention in 2021 they expanded market share in the fastest growing segments in the gaming market, which were mobile, augmented reality, and virtual reality. Nearly all, if you're into the big NFT space, nearly all of the NFT games that have been built and deployed today are built on Unity. There obviously are some kind of being built outside in Unreal Engine, but most of them are made through Unity, which I think is pretty good. The other thing I do want to mention is Weta, the acquisition that they keep talking about, is opening a lot of doors in Hollywood. And the CEO, when asked about this kind of integration of Weta, you could see the excitement that he gets. Weta is, I believe, going to be one of the best acquisitions that they've made, and management believes so. Now, I mentioned that Unity had a strong non-gaming quarter. They partnered with a lot of pretty cool companies. They partnered with eBay to enable sellers to showcase the actual item with a 360 view of some of their proprietary technology. Again, eBay might not be the best place for e-commerce, but it is opening the market to e-commerce solutions. So that's great news. The second thing they mentioned, they partner with Hyundai Motors to connect an actual factory with its digital twin. So the digital twin is a virtual version of the factory exact model where management, logistics, or whoever can kind of work around of, hey, maybe it might be better for logistics if we move these machines around, if we kind of run this kind of pattern instead, if we run this route instead. So again, we're seeing huge growth outside of gaming. Now, if we take a quick look at metrics, Unity Software price to sales ratio, forward ratio, it's not horrible. 16.33 for a company growing at high 30% year over year and expected to grow at those levels for the long term of things. I don't think it's the worst thing. Obviously, some investors might wait. Anything in the low teens, I think, would be amazing. So now, finally, my overall thoughts. Like I mentioned, this was a strong quarter if you are excited about the non-gaming, which I am. Management is very excited of the transition from 2D to 3D. We're getting a lot of talks of things like digital twins, for example, of digital avatars. Also from non-real-time to real-time. Real-time solutions are very needed as things as autonomous driving, automation in factories continue to increase. You need those solutions. Also, from non-interactive to interactive creates a massive growth opportunity for Unity in multiple markets. Gaming, we saw e-commerce, automotive, architecture, media, entertainment, and many other sectors. This is actually from one of my, I want to say, close friends here in the investing community, Adam. He mentioned that Unity seems to be like the Microsoft of the gaming market, that they have numerous tools all bunched up into one service. Huge growth potential, like I mentioned, especially in non-gaming, a company with strong net expansion rate and improvement of margins, and is heavily focused on innovating. This is a company that focuses a lot on research and development. But here we can see risk highly valued to some extent, right? 16 price to sales ratio is still expensive to many. It's non-profitable at the moment. This company is doing numerous acquisitions which can maybe deteriorate the balance sheet to some extent. A company that's very dependent in high research and development. And finally, if there is a huge risk if there's a slowdown in the gaming market and a slowdown in non-gaming market. At the end of the day, this is a tier 1 company for me. I enjoy it and will continue to hold. So take care, have a good day, and see you next time.